Last week, the S&P 500 was down 2.08%, the Nasdaq dropped 3.15%, and the Dow Jones declined 1.24%. Early last week, stock prices hit fresh highs, but the S&P 500 and tech dominated Nasdaq saw their largest weekly losses in over 2 months after traders decided to take some money off the table. Gold and silver prices fell sharply as concerns continued about high prices, following the publication of last week's in line with expectations U.S. inflation data. Platinum and palladium prices fell after China's latest round of stimulus measures left markets unimpressed. Oil prices declined, while natural gas prices rose slightly in a week, dominated by speculation on the possible policies to be adopted by the new U.S. administration, which will take office in January. It was also announced that Tesla CEO Elon Musk will next year head a department concerned with cutting government waste. This week is light on top U.S. data, as the country will have a shorter week due to Thanksgiving holidays. But in Europe, Eurozone inflation figures will be released on Tuesday. In the earnings season, the most valuable company in the world, NVIDIA, will post its results on Wednesday. Early this week, news that the U.S. gave permission to Ukraine to use longer-range missiles inside Russia supported gold, silver, and oil prices. Snowflake climbed 3.3% by Friday, close to business, and hit an almost 2-month high of over $134 on Wednesday. The AI-linked data company moved higher last week as sentiment brightened that an incoming administration may benefit tech stocks. In recent months, Snowflake has underperformed its AI rivals, leading some market participants to believe it is undervalued. Wall Street giant Victory Capital Management increased its stake in the company by almost 50%. Most investment banks are optimistic that Snowflake will produce above expected earnings when posting results on November 20th. Salesforce's stock price declined 1.5% by the end of the trading week after the company hit a record high of over $347 on Tuesday. The AI software company benefited from last week's tech stock rally, but has been rising in recent weeks after the announcement that the company will hire 1,000 employees to promote Agentforce, a new generative AI product which could potentially net the company large revenue increases. Salesforce is scheduled to report its earnings on December 3rd, amid expectations for continued company growth. Crude oil prices slipped 4.5% in a negative week for the commodity. Market sentiment was heavily influenced by the likely policies of the new U.S. administration, and it is expected that the winning Republican Party will attempt to raise U.S. oil production. On the demand side, U.S. inventories data showed a rising trend over the previous week, while Chinese data suggested that oil demand in that country continues to slow, adding to the pressure on oil prices. Gold prices also fell by 4.5% to hit a 2-month low in another volatile week for the precious metal. Market participants have become concerned that inflation, which was unchanged last month at 2.6%, remains too high, which has reduced the likelihood of previously expected multiple Fed interest rate cuts next year. Inflation concerns have been exacerbated by the possibility of trade tariff policies of the new U.S. government, which could come into force next year. Wheat prices dropped by 6% by close of business on Friday, not far from a 3-month low. Most recently, wheat prices and other commodities have been under pressure from a stronger dollar, making U.S. exports more expensive for foreign buyers. But wetter weather has also improved supply outlooks in areas previously hit by drought. Despite some sanctions, Russia is continuing to export wheat at high levels, which has somewhat saturated the market. The GBP-USD pair fell by 1.6% to record a 6-month low as the dollar continued to firm against most of its rivals. In the U.S., unchanged inflation data and a speech from Fed Chair Powell implied that while a December rate cut was still likely, multiple rate cuts are not expected next year. In the UK, economic data suggested that economic activity remains too weak in the country, increasing the pressure on the Bank of England to cut rates.